All righty. Doc here from North America. Good morning, good afternoon, and good evening. Let's see, what's this? Okay. Just trying to figure out why I've got a cord going against me. And we've gotten the old system back up. Now we only have it down to 1 day behind, which is really nice. And you will be able to see Brent with our mathematics now. And we'll be able to look at some of the other products around the world, or even domestic, in the same situation, which is really cool. Hello, Robin. Hello, Robin. Good morning. TGIF. Thank goodness it's Friday. All right. Yeah, I got that figured out yesterday, too. All right, now let's, you can see there's the dollar index. Let's see, where's that? That's the genetics conversation I was just looking at. That's very interesting here, this one right there. Dennis Nobel explains revolutionary theory in new genetics. Just lost my glasses. All right, so we've got all kinds of wild news going on here today, and it's the end of the week. It actually sounds like we may be bailing out China now. They've sent a delegation to the United States to talk about borrowing money from the United States. I mean, that's how bad China is at the moment. Their economy is really upside down because they are like a colony of ours. So in other words, if we don't buy X amount of things from them, they have real problems because they've learned, like all other good politicians, and that is to spend more than you take in. They're all bad politicians that do that. Take in more than taxes come in. In other words, learn to live inside your budget. That's what the real story is. All right. So you can see there's the dollar index on the beta. Show it to you on the main screen too. I think it's there. No, that's crude oil. Let's put it up on the main screen too. Right there. You can see, went into the daily sell there. It's still in that sell. And you can see the long weekly ride it has been. And we have that same thing going on inside or on the beta. And once we get this set up better and wider, and these things a little bit wider and wider, you'll be able to see the same perspective. You can see. And then the zero line. Once we get that zero line into this on the beta, it'll be even better to be able to read from. So that's the magic of it all right now. And but the most interesting thing I saw in the news over the last not even 24 hours, just in the last few hours, was that China, the delegation that's coming here, is specifically coming here to borrow money. That's the weird part. So in other words, they threaten us, and at the same time they're like a child of ours. You know how children kind of do things in the opposite direction of what you want them to do sometimes. Sometimes you do things in the opposite direction you want children to do. But in the end result is that, it's like, wait a second. Why are you threatening to be the world reserve currency of the world, and you want to dominate the planet? At the same time, you have to come here and borrow money. And at the same time, you have almost $8 trillion parked here in our bank accounts. So why don't you just take some of your $1 trillion and spend it? They're terrified if they lose that trillion. In other words, if they end up spending it, then they won't have any money to fall back to. So they need that $1 trillion of American bonds to stay here, so that they have a cushion. It's like a bank account to them. So that was, to me, I find that to be the most fascinating thing today. I know you won't be hearing too much about it, because the regular media doesn't really talk about things like that. They talk about, sunshine, blue skies. Who's bad? Who's making life bad? But for us, here at the Ducoscopy webinar every day, we talk about reality. And so, in other words, when you listen to this webcast, 6 months from now, you'll be like, wow, how about that? He had the right direction, or he had the right information. We just didn't understand it at the time. And will the mainstream media even discuss it even 6 months from now? Nah. They'll be on to the next spin cycle. All right. So from there, we go over to the euro. Let's see what the euro is up to today. There's the great experiment. Well, at least it's turning down. That's kind of nice, But I'm afraid this thing's going to see the 40s, the low 40s at this point. It's a shame. You can see here the euro dipping a little bit today. Nothing major. We're in that weekly thing. So, you got to take profits, traders. People who have these, positions on. Sooner or later, they need those assets for other things. Take some, if you don't take profits from things you're making money from, sooner or later, when you go to sell them, they may not be profitable anymore. So in other words, that foolish concept of let your profits run. I don't know, that was back before there was derivatives in the markets. That was back in the pre 75 period, and then all the way from many moons ago. After the creation of listed options in derivative markets, now you only see a third of a story. When you're watching something go up in value, you don't know exactly what the other thing is. So in other words, most funds use the derivatives on some level or another. Are they smart about it? Not all of them. Are they foolish about it? Not all of them. It all comes down to how you use your derivatives. And, if you do it in a smart, logical way, or if you just do it in a nonchalant way, we could get into a whole conversation about understanding what a straddle is and what is a hedge, and how do you build those or create those positions for fair value. I guess that's the best way to describe it. Fair value. Not overvalued, not undervalued, fair value. And so fair value is a whole deep conversation in its own right. So, all right, and then from there, you can see, the weekly is firm, as I said a few seconds ago, and so this is just probably some profit taking, nothing major in that. We could do this. Let's go over and check out the 30-year bond. There it is. All right, so you see this right here. This is the price of the bond, not the interest rate. So when it's rising, interest rates are dropping. And so when this was rising up, interest rates were dropping. And when this is dropping in price, interest rates are going up. And so here interest rates are dropping. Here interest rates rose. Here interest rates from there to there are dropping. And now we've got this little hiccup, I guess you could call it. Just the interest rates are going up a little bit, not a lot. There's no doubt they're going to cut, as far as I can tell. They will cut in September. I was thinking about it today. The Bureau of Labor Statistics, in other words, the party that's in power right now in the White House is desperate to have an interest rate cut. They need an interest rate cut. Remember how many months Joe Biden, the sitting president we have right now, not running for president anymore, but just sitting president, say, they're cutting those rates. They've been telling us that since November of last year. And so money is lined up, prepared for an interest rate cut. And so, they need money for campaigns, and if they've told their followers, I guarantee you we're cutting interest rates, and Joe has said that interest rates are being cut. Obviously, the last 10 months it hasn't happened. But, they're desperate. So, they allowed the statistic to come out. It just shows you that there's an organized group running the country, not a specific president. So we don't really have a chief executive. But that's not that important of the conversation. The important thing is that they're going to drop rates because they need to drop rates. Now they've made it a fundamental, in other words, they just removed 818,000 workers out of the workforce statistic. So, in other words, they didn't go and fire them, they just didn't exist. And the only way they would allow that information to be revealed is because they're more desperate to feed their supporters, financially, so that they can feed them with campaign money. So I know that sounds kind of Machiavellian, but it is the way it works. And I could describe to you how it works even closer and more precise, but we're not having a conversation of campaign finance at this point. We're having a conversation about interest rates. So they've set up the most extreme way of getting that interest rate cut. They pulled 818,000 supposed workers out of the statistics of the Bureau of Labor Statistics. And so to them and Mr. Trump, everybody sees that and says, hey, obviously these numbers are bad. The economy is weaker than what it has been portrayed because, the ruling, the party in power for the last 3.5 years keeps on telling us we have a wonderful economy. And CPI has come down, a little bit. It's done a pretty good job. It's not where Mr. Trump was, but, he was at 1.41. It's up in the threes. It's still double what he had. And they've also played with that also at the same time. They've played around with the Bureau of Labor Statistics. Their food inflation in America is much higher than they allude to. So, it's classic politics. That's what it really comes down to. All right, so let's see. Let's take a look back at the currencies. Let's see what the cable's doing. But this is what's going on here. You can see this triangle formation developing. So in other words, it's already in the market that they're going to give us at least a quarter point. There's speculation that it'll be a half by the end of the year. So money, is getting more freed up. They'll take their profits and they'll transfer some money over to the politicians, donate it. That's legal. So it's allowed. Now let's move this red line now right to there. There we go. And you can see there it's not, it's not big action. Will this go roaring up? Maybe a little bit more. So in other words, interest rates will come down a little bit more. But overall, I think it's built into the market, just like you can see it in the price of the stock market and so forth. And at the same time, the currencies play more of a catch-up. They may lead too at the same time, but they're like, let's go right here again. There's the euro. And you can see our math was trying to tell us over and over and over and over and over again. You can see it for 7 weeks now. It's been trying to tell us that it wants to go up. And obviously it told us that right here. Is it right there? That week. On this week, that's why the line is at the end of the week there. Or is it at the middle of the week, actually? And you can see here, it's definitely higher. You see that right there? That's definitely higher than here. Now, did it go up in a straight line? No, it never does. This market goes up and down because why, traders? Managers have to keep their portfolios balanced. And so when a stock is making a lot of money and it outperforms the rest of the portfolio, they're not blind. They don't just sit there and go, oh, good, let's let it go. No, they take some of it off the table. In other words, they take profits. And so that's why you get the ziggy-zaggy action in a market. Goes up and down, up and down. But our math picks up the general trend, just like when it went into the weekly sell up in here, the general trend was down. And it went down for a while, popped back up. And the daily, let's move that over. The daily gives you the warning if it's shifting on a shorter term basis like that. And then, it slides back into the sell, and we're in a weekly sell here. And sure enough, where it went into the weekly buy here, that's definitely lower than here. Does it go in a straight line? Never. You can see it even in one of the better moves where it goes into the weekly buy here. It still zigzags. It rarely just goes on a pure rampage. It went into the weekly buy in the area here, and it doesn't. It goes up. They start selling it on a short term to take some profits. They try to get into a buy and they fail at it and go down. You're not short throughout this whole period. You're just flat, and then you go back into the buy here, and obviously you catch that. It's winner, chicken dinner. It gives a little profit taking there, and then back into a buy here. And since we're in a weekly buy there, you're long again. And it goes on and on and on. That's why we follow our numbers the way we do. So let's see. Let's move that right to there. And let's see. Let's make that green. There it is. There we are. And I guess if we widen it out more, it's always a lot better that way. You can see it a lot more clearer. The weekly buy, daily buy. Goes into the daily sell right there. And then, you can see the downwardly pressure, and it goes into a weekly sell. So, anyhow, how's that? Does that make any sense to anybody out there? I would hope so. And we try to show that, and then we use the spreadsheets. You see the spreadsheet on the screen. And taking a sip of water there, and you can see the spreadsheet here. You go down to let's find the euro. There's the euro right there. It shows you. It's telling you it was 6 weeks coming in of a weekly buy, and was that 6 days in a? Let me just put my glasses on so I can read that. All right, just get closer to it. There it is. 9 days in a daily buy. So that's what the spreadsheet is all about. The spreadsheet is basically a track record. We've been doing the spreadsheet forever and ever and ever for decades. So it's a way of keeping track of it all. All right. Right there, cable. And I guess the revolution is over with, and I guess we can take that box out of there now and just move this over. Went into the weekly buy at the beginning, in the middle of the week there. It's been in a daily buy from here. You can see the fast algorithm on the weekly turned up through the green line and showing lots of strength there. Usually when it does that, it goes through a green line, shows you the weakness. It's just a faster algorithm than the green line one and the white histogram. And there's a standard deviation between the two at the same time. And so just like the manifold is a standard deviation, same thing. So all these little nuances can really give you great insight to the marketplace here. And anybody would like an explanation, just say, hey, Doc, explain it to us. And we'll go like, okay, this is how it works. All right. See, what we do is we show you results. We don't show you how to duplicate. Actually, dukascopy. On the old J4X, we had a very close emulating indicator. We called it the Doc's Manhattan indicator. And they were supposed to actually make it so you could push a button and put it on the screen, and then I don't know. Yano says that they're moving away from the platform. I like their platform, so I enjoyed using it, and I won a lot of contests with it, so I wasn't complaining. All right, so there is the cable, and it's marching north, and it doesn't seem to want to let go, and it's going back into the buy. And obviously, the revolution that they were worrying about in Great Britain is not there anymore. I haven't seen that warning sign. I did see something today. I can say that I did see something about Great Britain and where was it? There was something here. Let's see if I can find it. Let me just put the. When I find it, I'll put it up on the screen for you. And there's the British pound there. There it is. It's not okay anymore. UK free speech crackdown targets extremist ideologies. The crackdown includes those accused of misogynist views. So in other words, the little revolution is still going on, but for some reason, it's lost traction. Let's put it that way. And you can see it in the cable. Where is that cable? Let me go back to the cable real quick. Right there. You can see it's definitely, this was the concern about a revolution or a civil war, I think they called it, civil war. But you can see here, they've seemed to have gotten over that fact and realized that there is no civil war coming, that they're going to stop locking up moms and dads for complaining about crime. That's pretty much what it comes down to. They're complaining about crime or boys playing in girls' sports. That's against the law too. You can't complain about the idea that boys can play in girls' sports. As long as they wear a dress, it's okay. Doesn't matter if they're a boy, but if they wear a dress, it's okay. All right, from there we go over to the inflation fighters. A little surprised how stalled it is, but then look where it's at. It's down in the low 85, 85 area. It's down in the lows. So that's pretty cool. Again, I advocate for the idea that we have a Swiss banker or two on the U.S. Federal Reserve because they seem to have more common sense than all these liberals that they have. I think there's like 2 Republicans out of like 90 people on the Federal Reserve in the decision-making area. I mean, it's like, what's up with that? Why do they keep on putting these socialists in there? Socialists have no idea about capitalism and economics and, free markets, free people. But they do. The place is packed full of a bunch of Democrats that are just basically socialist and Keynesians. All right. So, yes, I vote for, let's put a couple Swiss bankers on the Federal Reserve since it's the global financial markets. They should. That's not a bad idea when you think about it. Just put some intelligent capitalists into the federal system. Now today, Powell's going to speak in, what time is it now? About 5 hours. He's going to speak in about 5 hours out in Jackson Hole in cattle country and pretty much make it pretty clear that they're going to be looking at those statistics very heavily. And right now, things are looking more like an interest rate cut than not. He'll come away with saying something like that in his own Fed speak. All right. So. There. Let's go over to bada-da-bing, bada-da-bang, bada-bada-boom. Let's go take a look at the yen. There's the yen. See, the yen's pretty calm right now. Maybe this is Japan, China. Might be China being bankrupt at this point. And, Japan being bankrupt. So maybe they're all calming down a little bit. Now, they still operate. They have to function. So I'm not worried about the level of debt they have. Because, they have 100-year bonds and things like that. So, you can pass mortgages on the family now. And so you can see here, it's trying to climb into the buy today on a daily basis. But look at the weekly. Even the fast, as much as it's through the green line here and started to turn up right there. You can see that. Especially when it got to the manifold on the negative side. It's still trying to climb. But this is not really doing that good a job. It's going sideways. That's really, and sideways, it's basically like a like a triangle or a flag pattern. So it's really hesitating. It's not really showing us conviction. We're not seeing a lot of conviction when it comes to selling or buying the yen right now. They just seem to be parked sideways. All right. From there, we go over to the great experiment. This is the example of inflation and out of control theory of finance. You can see this. Poor thing's gone from 1 to 38 basically now. It's been in that weekly buy forever and ever and ever. Let's go over to the spreadsheet. We'll find it in a few seconds here. There it is right there. Euro, Turkish lira. So it's 15 weeks. This product is notorious for that, and 8 days in a buy, and 15 weeks in a buy. And we've seen this product go as many as 54 weeks in a buy. We've seen this product go 51 weeks in a buy. In other words, over the last 8 or 9 years, this thing has gone into rampages. 49 weeks in a buy. In other words, almost a whole year, it stays in the weekly buy and the product goes up. Our math just picks up on this all the time. It's just truly a disappointing situation there. There's nothing really we can say more than that this policy that they're following, I don't understand it. I just don't understand, unless they're trying to destroy the country. Because you're looking at supersonic inflation at this point. It's not hyperinflation. It's devastating inflation. So I don't know when they're going to stop it. There doesn't seem any message. I could tell you this: if President Aragon retired, wouldn't surprise me if you saw this thing go down. In other words, the inflation would start to dip, because whatever policies he's had when he took over as prime minister, it's been on this rampage to run. And when he became president, this thing went supersonic. It went from like 5 or 6 to now 38. So whatever ideas he's got in his head is definitely something that's not very conducive for that currency. Let's put it that way. All right, from there we will go to, and that is the great experiment every day. It's interesting to watch because it's an industrialized nation that's just under full attack by its own currency. All right, there is the South African rand. We follow that. We see a lot of, we're totally convinced. I mention this every day. We're convinced that there's a 33% premium in the currency because of the politics. But we've been very lucky. They've been very lucky, and that is that the ANC lost full control this year in the elections. So now they have what they call a government, a working government of 3 parties. The Zulus, the old conservatives of South Africa, the ones that weren't supportive of illegal immigration voting. What killed South Africa really more than anything else is, they gave votes to illegal immigration, like half percent votes, things like that. You counted, so 2 illegal immigrants equaled 1 domestic voter. So it had nothing to do with race. It had to do with immigration. Let's see what else we got going on there. Let's go to gold, because this follows the gold market. A gold market follows gold. Let's put gold up over on the beta. Right there. No, that didn't do it. Let's do it again. Right there. There we are. So you can see here's the South African rand, and then we go over and we see gold. You see gold has slid into the sell for the last couple days, but the weekly is still. We need to get this wider. I wonder if I can push on the big. Let's see, where's that? And you can see it a little bit better when I go into the big. You can see it's still in that weekly buy. You can see it on the spreadsheet. Right. Let's see, where's that? Right there. You can see we are 7 weeks in a buy, 1 day in a sell, and then we'll go over to here and show it to you because it's clear over here. Right there. You can see it went into the sell a day back. It's still in a sell today, but it is lifting back up again. This is all-time high right there. So it's, there's a lot of profit taking going on. Following the South African rand has been nowhere near as accurate because of the politics, especially after they found out they couldn't get rid of the last president until the election. They tried to get the last president to resign. They found over $500,000 in cash in his office. actually in the sofa. He was hiding it in the sofa. And he refused to resign. And that's when the currency broke away from the metals market. Whereas before, it was locked to the currency market. And we showed that day in and day out, year in and year out, how close it was. But a little sip of water there. But where we stand now with the metals complex, which is interesting, as you can see right here, silver is playing with the weekly buy again. Now this thing, fell off of the low 30s, very low 30s, like 32, 31, and they played it down to almost 26 again, which has been a major support area for a while now, and resistance area. Remember, we went for a couple years battling with that 26 to try to break through it. Now, obviously, at the same time, something is a little awry, and that is that the all-time high in silver is in the 50s, and so here we are trading at where's that today? 29.39, as it just ticked there. So it's way off of the 50 target area, or 52, 53. Whereas gold, on the other hand, gold is cruising along in that range. It's only a few dollars off from its all-time high. So, there's not a lot of synchronization, I guess you could say. Not a lot of cross-matching between the two. And at the same time, where is it at here? You can see in the platinum. Let's put the platinum up there. Platinum is really having its issues in the daily sell like gold, and it's not even up for the day. And at the same time, you can see on platinum, this is the 6th week in a weekly sell. So platinum has only found a way to go down with silver. Silver was on the spreadsheet. You can see that. Silver is 5 weeks in a sell, going to go into the weekly buy this week the way it's at. At the same time, platinum has also been 5 weeks in a weekly sell, and it's going to stay in that sell unless they take off with it today. If it goes roaring up, and you can see there it's going to be a 6th week. Maybe next week they start to play on the long side. In other words, they start buying it again. But when you have gold at all-time highs, and then you have all these other products, you're looking at platinum. It's $2,000 off of its all-time high. Not $200, $2,000 off of its all-time high. Silver 50%, not 50%, but it's like 43% off its all-time high. Copper, which is gold for China, let's put that up on there, is showing some life, no doubt about that. But it's also in that same boat. It's going on a 6th week in a weekly sell. It's trying to climb back into the daily buy today, and it was in a buy for the daily here. And so you knew that there was going to be pressure on the upside from the $4 to the that 420 area. But overall, copper is also off by 35% from its all-time high, and that's a lot. Especially when you see the the number one precious metal, gold, flying along at all-time highs. It's almost like they're pairs trading it all. So they're buying gold, selling copper, buying gold, selling silver, buying gold, murdering platinum. One thing, you're talking about platinum's 60 some odd percent below its 60%. Platinum is 65-70% underneath its all-time high. Gold is sitting there almost at its all-time high, and silver is like 40 some odd percent underneath its all-time high. So they're pretty extreme. That's a pretty extreme event going on there. All right. And so that is the metals complex. Now, good news. The good news is that we now have we can show you Brent with our mathematics, which makes me very, very happy. Let's see. Right there. see if we can get that up there. Let's try that one more time. What we'll do is we'll put the crude oil, which is really interesting, and that is that it's still showing strength, crude oil right there. And let's do this. Oh. There we are. And let's minimize that. And I believe that is the Brent. All right. So here is crude oil, and it's trying to lift, and this is the back month that now is the front month, which is in a second week and a weekly buy. And we've tried cleaning the math up, and it still says the same. Maybe we need to find out what's going on there. October crude on the 1st. Let me just take a look at that with that gap. Maybe that's where the damage is at. Let's find that. Futures. Markets. Ah, that's the problem. That's the problem. That's the problem. Okay, we need to fix that. That's what it is. Right there. There's the problem. Right there. That's all messed up. Okay. I didn't go back that far. I did not see that. All right, we'll fix that. Because I'm confused why this thing is pushed up into the buy. And the numbers look extremely dramatic. That's what that is. Okay, we're going to fix that. So what we're going to do is we're going to show you on the other platform with our math. We got that running again. It's only a day behind, which is not bad. So right there is Brent. There's Brent. And you can see Brent is, in daily sells, just like the way, regular oil is over here. Same thing. And it's trying to climb up into the buy. And you can see right here, it's getting close, climbing up into the buy. It's trying to turn up. Now that's today on the open, high, low, and close. But the algorithm is still not feeding us. That's yesterday's move. So we could be plus today. And at the same time, there's the weekly trying to move up at the same time with the Brent. Now, let me just show you crude oil on here, and it looks identical. See that right there? It's the same way. It's trying to climb up. You can see the weekly trying to climb up, but it's in the minus. Whereas when we go back to, where's it at? Right there. When we go right back to there, you can see it's in a weekly buy. And I don't understand why. Now I know why. It's this pocket right here needs to be fixed. It's all screwed up. These bars are all bad. So we'll fix that, and then we'll get a better idea. So on Monday, we'll see where that's at. I'll know when I start working on it after the webinar. So, because that's definitely been disturbing me, and I don't understand why it's been like that. And the September contract wasn't like that. It was in a weekly sell. So we're going to get that straightened out. And then from there, let's see. So is that it right there? Yeah, that's there it is right there. So you can see the crude and the Brent right there. Reflecting the same. They move the same. So, matter of fact, I think I might fix that right now. I am hungry to fix that because I don't like how distorted that is. Let me just double check it. I think I can fix it pretty quick. It's only fixing 2 bars. There's the first. The first was right. And let's see. Yeah, see, the second is wrong. And the fifth is wrong. See, that's what part of the problem is. And matter of fact, they both are wrong. How about that? Okay, yeah, we need to fix that. So, let's see what I can do about that, going like that. And then we go, move that over to there. And then let's open that up. And then we can do it live. Unless someone wants to see something. If you want to see something, I will stop what I'm doing. And we'll go marching along. But since no one's asking any questions, oh, wait a minute, here's questions. Okay, cool. Let's see. Eskander said, "What is it? What is that thing that you have open there? Are you reading the chat? Yes, I'm reading the chat now. I'm sorry about that. I was looking at the exchange and what they were showing quotes for October 1st. Is it October? I'm sorry. August 1st and 2nd and 3rd and no, I'm sorry. October 1st, 2nd and 5th and 6th. The math is all wrong there. So, which one are you asking about? Let's see. How do you find these data? Oh, here, I'll show you. Right here. Right there, Chicago Quant Technologies. We do a webinar every day on Ducoscopy for about 11 years now. And we share our results every day. And so if you want you want to get some of this data a little bit better, there's our phone number in the United States in Chicago. And at the same time, there is our web address right there. You just Google ChicagoQuantTechnologies.com and let's see if home. See if we can find some subscribe, something like that. I think that we can find the website a little bit easier. Where's it at? Contact us. Maybe when I click on contact us. But you can go to, let's see if I can get the web address. It's Chicago Quant Technologies. Right there. How's that? Does that give you a good idea? And then we have our symbol right there. Underneath, we have Ducoscopy at the top. We have Chicago Quant down at the bottom, and we have the spreadsheet in between. You can get one of our spreadsheets for free. I give that out to everybody for free. That's no problem. And then you just call Chicago and contact them. Or text them, or email them. See, and what ACN you find out with data? It looks so confusing. Well, we can. I can explain to you the whole system if you want an explanation of the system. I can do that right now for you. So, and what actually you find? See, let me do it here. Let me just push this for a second so I can see the heart. Okay. So, and what ACN you find out with that data, it looks so confusing. Okay, so let me explain it to you. It's very easy to do. Do you have anything you would like to see? Give me a product and I'll explain how our math describes where it's going before it goes there. So let's see. ACN. I don't know what an ACN is. Is there can't see? Is that what you're saying? But would you like to look at the euro, or would you like to look at gold, or would you like to look at crude oil, or what would you like to look at? And I'll explain it to you through something you like to watch. Cable. Good. Perfect example. Perfect example. Okay, here's cable. Yeah, Robin. You just contact Robin. You can get a 2-week free trial. You can get the spreadsheet. No problem. Okay, here's cable. Let's explain the cable to you. Okay. Here is the actual open, high, low, close. Okay, we have some dots on here, the red dots and the green dots. Notice that when we get a green and a red dot together, we get more volatility. You get one there and you can see more action comes. Get one there, you can see more action comes. Now, put that to the side for the time being, okay? Just like where we had a green and a red dot right there. And then what we got was we got a nice big move out of it. A lot of times at the corners, as I like to call it, or at the beginning or the end, at the end of something, you get these multiple dots. Normally it's just one dot, a green or a red. And red is obviously bearish and green is bullish. Now, the center point right here is the daily algorithm, okay? And I'm just going to widen it out for you, make it very close and clear. All right, we put the green line in there because it helps people see. I'm just going to move that over there like that. The zero line has been breached. The white histogram is plus. the green line is through the 0 line. Okay, that's bullish. In this case here, it went up for a while. Okay, and we put a line in there so people can just know that that's what's happened. We put the red line in there because now it's gone into, we got a, let's cancel that. We got a, okay, let's go like that. You got a, the red line, we got a red dot, but we got this to drop underneath. When it drops underneath and it's just a red dot, that's bearish. You can see what happened with that. It went down for a while. And then when we got towards the bottom of it, we started getting a green and a red dot there, and then we got one there, and then at the same time we went into a buy. When we go into a buy from that red and green, we know that there's strength coming. Let me see if I can move this back up again. How did we move that down? Let's try to move that back up. Cancel. There we are. Cancel. See if I can grab a hold of that. There we are. All right, now where's the dots at? Oh, there. Okay, so, all right, that's to start off with. All right, so that's how you read the center bar there. Now, this was all that confusion that was going on. It's going into daily sells and buys. What we do, we combine the bottom chart, the third chart down below, which is a weekly chart. So, in other words, if we're in a weekly buy, you can only take daily buy trades or longs. If we're in a weekly sell, you can only take daily sells or shorts. Okay. If we go into a daily buy and we're in a, or let's go the other way around. Here you can see we go into a weekly buy here. You can be long, and you can follow the longs. Okay. It's telling you what the momentum is with the both of them together. Now it goes into a daily sell here, and we're in a weekly buy at the same time. It's a neutral position. So notice there's three. We go with the premise there's three positions: a long, short, or neutral. Okay. This way it satisfies producers. In other words, manufacturers, traders, straddle traders, directional traders. By having the three different positions, it's clarifying if you should be long, you should be short, or you should be neutral. Okay. And you can have a position on and be neutral at the same time. That's basically a straddle. Okay, so that's how this all works. So when we're in a weekly buy right here and in a daily buy, you can be long in here. Okay, when we're in a daily sell and we're still in a weekly buy, you're in a neutral position, so you're not taking any pain. Goes into a sell here, and you can catch some of this little ride down a little bit, not a lot. It goes quickly into a daily buy right there. Now, even with it in the weekly sell, this is during the 2 weeks back where they thought there was going to be a revolution or a civil war. That's it. 3 weeks back they were talking civil war, and in the end result is that it basically built a bottom out of that, and we went into a daily buy right there. So you knew you couldn't be short anymore, even with it in the weekly sell for that 2 week period. We go into the weekly buy this week right there, and obviously you could be long for the last 3 days or so. And you can see one thing's for sure. You're not short, okay? During that whole move up, you're not short. You may not be making long money from it, depending on how and why you're trading. Remember, there's a few reasons why people trade. One is obviously they're manufacturers of product and they're hedging their situation, okay? There are people who just trade to make money, okay? And you have a choice on how to do that, you as an individual. You can be buying the actual cable, selling the dollar. You could be buying call spreads or binaries. You could be selling put spreads. You could be doing a back spread in a straddle form. There are different tools you can use. We can talk all of them. We can explain all of them. They're not that complicated. They just sound funny because you probably don't hear many people talk about it. All right, so so thank you so much for helping out. Oh, no problem. So it's telling me a directional. Let me just put a dot in there so I can see that damn heart. We can't get rid of the heart. Giannis has been trying, and I tried, but it doesn't seem like. Oh, okay, there it is. So it says so it's telling us a directional bias like the CTFC report. No, CFTC report is looking at open interest and volume. We're a conscious, I call it a conscious algorithm. It tells us. It doesn't tell. I designed this back when I was in school in England. I was trying to do atomic theory with it. Okay, I was a physics major, and so I was at back in the 70s. I was at one of the universities for a year, and they had a mainframe, and I was running different concepts. I was trying to understand atomic particles better without interfering with them, like removing the double slit problem. And the end result is that they legalized options the year after, right around when I came back to the States. And everybody in the math side, the math department and all like that, were talking about the idea that the zero-sum factor had been removed. And by 77, 78, I started exploring the option universe. 79, I got a job at the American Stock Exchange, and then in 1980, at the end of 1980, I got a job at the Philadelphia Stock Exchange, and I've been trading options for many decades now. And so it moved. A lot of math people moved into the financial markets. I took my formula at the time, not knowing exactly how to use it totally yet, because I was still forming it. And one day I was taking data, and I thought, let me try using my atomic theory formula on the stock market, and it was very insightful, which then gave me more knowledge about using it in science, because now I've used it on a galactic level and on a scientific level, and I can get it to work in everyday markets. So that's the explanation of it all. And you'll be able to play this webinar back and listen to that again too. So let's see, I'm reading what your texts are here. There's so many tools. I think you should do a YouTube video about them. I have thousands of YouTube videos every day from Dukascopy. You can go and look at our videos every day about all the mechanics and all, and what I think. What are you designed? Let's see. What you designed this? That's insane. I agree. I totally agree. I am a 16-year-old. I'm really fascinated how smart you are. Thank you. That's all I can say. So let's see. That's the magic of it all. You'll be able to see this video over and over again. You can play it over and over and save it and try to understand it. And you're welcome to tune in every day, and so forth and so on. So no problem there. Where are we at? We're at the end of this at this point. I shut down around 25 after, and it's 23 now, so I have to come up with a title. And so I think what we will do, since this is so involved in our technology, our math, what we'll do is we'll make it that title today. Yesterday's title was Cheap Money Feeds Markets. You would have loved that one. That's a goodie. Today is going to be, the title will be, we'll say something like charts and how to read them. Oop, that's it. And I think I'll get rid of and. So it'll be charts, how to read them. That'll be the title today. For you. That's for you. All right. Let's see. We're out of here. So this is Doc from North America. Today is Friday, so we will catch you on Monday, TGIM. Thank goodness it's going to be Monday. We will see you then. And today I'm very happy because it's Friday, because I like my weekends. So TGIF, thank goodness it's the end of the week, Friday. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, later, traders. And what's that? Escardar. A scander. Okay, like a scander. Okay. Ta-ta for now. Be safe, be smart. Have a good weekend.